Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, my name is Vinay Joseph. We released our Q4 2022 outlook titled A Tight Balancing Act, where we become a bit more balanced in our asset class outlook. And we believe that a core holding that allocates across all the major asset class with a greater focus on themes, sector, and tactical opportunities makes sense for investors as we go into 2023. As we approach the final months towards the end of this year, over the course of the next few podcasts, we address key investor concerns that may help them navigate better markets. In today's podcast, we look at the most burning question right now on investors' mind: whether the monetary policy reset, which has started since the start of the year across the globe, has much more legs to go or not. Now, over the course of 2022, global central banks have tried to enhance their inflation-fighting credentials by undertaking an aggressive pace of rate hikes, as they indicate that they are willing to sacrifice growth to sustainably bring down inflation, which is ranging to multi-decade highs. So one of the questions which investors have today is whether this move is now complete, which means have markets fully priced the likely extent of this hiking cycle, or whether there is room for these expectations to rise further. Now, these expectations are expected to rise further, especially given how we have seen central bank policy panning out in September. In fact, we have seen an aggressive wave of central banks turning more hawkish in September. This was with an unprecedented 100 bips rate hike by the Sweden Risk Bank, third consecutive 75 bips hike by the US Fed, to a third consecutive 50 bips hike by the RBI also. We now see front-loaded rate hikes coming in the months. We expect the Fed funds terminal target rate, which is the end rate, to be closer at 4.5% from today's level of 3.25%. The ECB benchmark deposit rate is expected to range in the range between 2% to 2.25% by June 2023. And back home, the RBI's repo rate is also expected to be at 6.5% from the current level of 5.9% by end of March 2023. This continued upward shifts in market expectations of central banks' policy rate has raised the risk of a recession in major economies and slowdown in some of the EM economies. Altogether, this has increased the probability of further near-term downside risk for equities as an asset class. So how should investors prepare for this upward reset in monetary policy? In our view, diversification remains the key to tide through this volatile environment. Investors should look to have a more balanced asset class view, as having a narrow focus risks excessive exposure to one asset class at the time when the outlook is still increasingly uncertain. As mentioned earlier, that's why we believe a core holding across asset classes and a greater focus on themes, sector, and tactical opportunities makes sense for investors. That's all for today. We would like to wish our listeners a very happy Diwali and festive season ahead. Please reach out to your relationship manager for a copy of our report, which talks about these themes and sector and tactical opportunities which are available. Also, keep watching out for this podcast series on our Outlook. And as always, if you like the podcast, please like and subscribe. Thank you.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered relationship manager or visit www.se.com/in.